Hello and welcome to my YouTube channel in which I talk about personal finance, investing, and lifestyle. So today's topic will be on Forex versus crypto and how to trade both. Now, if you have been following my channel for a while, you see that I've been posting content on stocks, crypto, and now also Forex. So let me tell you what are the similarities and differences. Let's dive in. So first, let's talk about what is Forex and what is cryptocurrency. Well, for Forex, the market has existed for over 100 years, and it consists of currencies like your fiat currencies, which are issued and backed by a country's government and central bank. So when you're trading currencies, you're essentially buying one currency and selling the other. Whereas for cryptocurrencies, these are not fiat currencies. They are actually digital currencies which you cannot hold in the physical form, as their transactions only exist on the blockchain network. And cryptocurrencies are decentralized. They are not controlled by any government or central bank. And for the cryptocurrency market, it is fairly new. The first cryptocurrency is Bitcoin, which was only introduced in the year 2009. So cryptocurrencies are considered to be a fairly new asset class. Okay, so now let's talk about the types of assets in each market and the diversity of assets. So in the Forex market, you can essentially trade any currency in the world. So you can trade different currency pairs. But most of the transactions in the Forex market are concentrated within the top 7 currency pairs, which are listed as shown. And the top 4 here consists of the most transactions, and so they are the most liquid currency pairs. Now, if we look at cryptocurrencies, as of 2023, there are actually more than 22,000 different cryptocurrencies. But most of the transactions are concentrated in the largest one, Bitcoin, and also in Ethereum, the second largest cryptocurrency. Now, if you are still new and starting out in the Forex or cryptocurrency field, then you might want to trade the more popular and liquid assets. So in Forex, you will probably choose among the top 7 major currency pairs, and in cryptocurrencies, it would be safer to stick to the largest one, Bitcoin, and also the second largest one, Ethereum, because when these are more popular, they are more liquid. More liquid means that it is easier for you to find another willing buyer or willing seller if you want to sell or buy. And also, it would mean that they are less volatile compared to the rest of the market. So for cryptocurrencies, if there is a market crash, Bitcoin will crash less compared to other smaller cryptocurrencies. So this is what you can take into consideration when choosing what currency pairs or what cryptocurrencies do you want to trade. So in terms of where you can trade Forex and cryptocurrencies, you can actually trade both Forex and cryptocurrencies on just one platform known as MyTrade platform, which I'm trading on as well. So MyTrade platform allows you to trade Forex and cryptocurrencies using CFDs, which are known as contracts for differences. So this allows you to trade without having to actually own the assets, because what you're actually trading are contracts which allow you to benefit from the differences in the buy value and sell value of the contract. So let's say you think that Euro will rise against the USD, so you can choose to buy one Euro USD contract, go long. Or if you think that Euro may drop against the USD, then you can choose to go short, which means that you bet that the value of Euro will drop against USD. People might say, it is a market crash. You are not able to make money from a market crash. But with CFDs, you can actually trade both directions. So even if the market goes down further, let's say Bitcoin's price drop further because of negative news, then you can choose to short a Bitcoin contract and you can still gain even though the market is crashing. So that is how you can benefit from trading CFDs. You don't actually have to own a Bitcoin in order to sell a Bitcoin. Here I am on MyTrade platform where you can trade different types of assets You have Forex, indices, commodities, shares, and they also have crypto now within their live account platform. And if you look at the tools section, they have a lot of useful information as well. So if you look at economic calendar, it will show us which day, which week will there be major announcements coming out from each country, which may affect the value of its currency against another country. And if we look at the news section, we can look at what are the economic news of different countries, and also commodity news as well. If we look at trading analysis, this is a section that I like. So it shows you the analysis of different types of financial assets. You have commodities, and then cryptocurrencies, and also indices. And then sign up for a live account to start trading and earning money from financial markets. So you can actually trade on their website, or you can download the MyTrade mobile app as well on your Google Play Store and also on the Apple App Store. So now we are going to look at what affects the market values, the prices of forex currency pairs and of cryptocurrencies. So it all boils down to the law of supply versus demand. Basic Economics 101. So what affects demand and supply? So for forex currencies, you would like to look at how a country is performing versus the other in terms of its economic performance. So you're essentially assessing the strength of a country's economy and attractiveness against the other. So you have to monitor data like a country's gross domestic product, which shows the growth of its national economic output. How much is it producing? And you like to look at export-import levels, whether it is exporting more than it is importing. That would affect its currency value, because if you're exporting more, then other countries' citizens will require your currency in order to purchase your exports. So that will affect the value of the currency. And also you want to look at the unemployment level as well. So that will show you the percentage of the country's citizens which are unemployed, and that can tell you how healthy is the economic performance, because if the country is growing and there are many jobs, then less people should be unemployed. So the unemployment rate should be low. And then you want to look at also inflation. So inflation shows you how much are prices increasing every year. So inflation can be dangerous for the economy, and as we have seen throughout 2022 and 2023, inflation has been a major problem in the US, in the Eurozone, as well as many other countries due to impact from the COVID-19 pandemic, supply chain disruptions, and also the Russia-Ukraine war that happened in 2022. So it is really a data point that a lot of people are paying attention to. Inflation, CPI, the Consumer Price Index, and PPI, the Producer Price Index. And then also you want to look at interest rates. Now, interest rate levels will be determined by a country's central bank depending on its monetary policy. So let's say inflation is high, then the central bank may want to raise interest rates in order to bring down inflation. And higher interest rates can be not so good for the economy because it makes it more expensive for people to borrow and buy stuff, and businesses will find it more costly to get a loan to grow their business. But higher interest rates can also cause a country's currency to become more attractive in terms of savings and interest, because if a country's interest rate is high, then if you invest in that currency, then you would get a higher return from that currency due to the higher interest rate. So a lot of factors come into play when determining the movement and the value of a country's currency. Now, what about the demand for cryptocurrencies? It depends on the market adoption. Is cryptocurrency becoming more mainstream? As we've seen in the year 2020 and 2021, there are more institutional investors and retail investors that are entering the cryptocurrency market, and this has caused the value of Bitcoin to increase dramatically, and for the total crypto market capitalization to increase to exceeding 1 trillion in value as well. So market adoption will affect the demand and value of cryptocurrencies. So if we see that throughout the future years, more and more companies and individuals will be investing in or using cryptocurrencies in their transactions, then the value of cryptocurrencies will go up. And it also depends on project progress. So for some cryptocurrencies, they have their own project milestones whereby in the next year, I'm going to upgrade the network to have more functionalities. So every time each new milestone is reached, that can increase the demand for that cryptocurrency and thus its value. Also, announcements on regulations can also impact cryptocurrencies because cryptocurrency market is subject to less regulatory oversight and protection. So whenever some news comes out regarding either a country banning a cryptocurrency or a country saying that cryptocurrency is legal in their country, that can have a huge impact on the value of a cryptocurrency, and especially Bitcoin, the most mainstream one that a lot of countries are paying attention to. So for example, if we look at Hong Kong recently, they allow people to trade cryptocurrencies on exchanges starting in June 2023. So of course, this kind of news has a positive impact on the value of cryptocurrencies. And if a country says it decides to ban cryptocurrencies in their country, like how China did a few years ago, then that would have a negative impact on the value of cryptocurrencies. So in terms of market opening and trading hours, Forex market is different from the cryptocurrency market. So for the Forex market, trading hours for retail traders, investors would be from 5 p.m. EST Sunday to 5 p.m. EST Friday. And trading sessions can be divided into 4 different trading sessions. So you have the New York, the London, Tokyo, and also Sydney trading sessions. And each currency pair will have its own session whereby it is most active. So for currency pairs that involve USD and Euro, then it would typically find most trading volume during the London and New York trading sessions. But for currency pairs involving the AUD and the NZD, Australian and New Zealand dollars, then you will look more towards the Sydney and Tokyo sessions, whereby they would be more active. While for cryptocurrency, well, the market never sleeps. Cryptocurrency market is open for 24 hours, even during weekends. So even when you're sleeping, someone on the other side of the world is actively trading cryptocurrency as well. So it depends on which time frame would you prefer to trade. Let's say you have a day job, then at night you may still be able to look at the cryptocurrency market if you're still awake. Now we talk about liquidity and volatility. So this can be something important for you to consider on how it can affect your risk appetite, your preference, and also your trading style. Which one are you more comfortable with? So for Forex markets, it is the largest financial market in the world in terms of trading volume because you have a large number of participants, large commercial banks, which contribute about 80% of overall trading volume. Then you have central banks, governments, institutional traders, and the rest of us, retail traders and investors. So there are a lot of people that are participating in the Forex market in different countries all around the world. So trading volume is large, and so the market is very liquid, which means it is very easy for you to find another party to buy and sell, to trade with. So you can quickly and easily enter into and exit out of the market. And it can present more trading opportunities on a short-term basis. And for cryptocurrencies, well, it is less liquid compared to the Forex market. The trading volume is much smaller as well because cryptocurrency market is fairly new it has only existed since 2009 for the first cryptocurrency, Bitcoin. So there is not as much people trading crypto compared to Forex. So because of this lower liquidity, there is also more volatility in the crypto market. So say if a few hundred billion suddenly enters the crypto market, now this can really affect the whole crypto market. If it enters into Bitcoin, then Bitcoin may just shoot up significantly, okay, even like go up by double digits within the same day. While for Forex, you don't typically see that, because even if a few hundred billion entered the Forex market, it wouldn't have much impact on the whole Forex market compared to in Bitcoin or other cryptocurrencies. So there is a major difference in terms of volatility. So in the crypto market, you can see large double-digit percentage rise or drop even within the same day or throughout 1 week. Whereas in Forex market, you don't really see that kind of movement. So if you want to trade crypto, you have to be more comfortable with the volatility involved, high risk, high return. So in conclusion, Forex market and the cryptocurrency market, they have their own set of differences, and it depends on what you are more comfortable with and which type of market are you more interested in. So whether you like to look at economic data or you like to monitor, what is happening within the cryptocurrency industry, the different projects that are available, and also whether you prefer to have a shorter day trading style time frame, or you prefer swing trading and being able to trade 24 hours every day of the week. And what is your level of risk appetite, whether you're okay with taking higher risk for higher return. All these you have to take into consideration when deciding whether to trade Forex or crypto or even both, like what I am doing. So pay attention to what is happening around you. This can really shape your knowledge of financial markets. If you want to understand more about trading Forex, crypto, or stocks, subscribe to my YouTube channel. In order to become a good trader or investor, you would have to learn technical analysis, fundamental analysis, and even sentiment analysis. So, check out my YouTube channel for more. Follow me on all social media platforms and check out the links in the description section below for more info as well. And thank you for watching. Leave a like if you've learned something and you support my channel, and subscribe to my YouTube channel. Alright, I will see you in the next video.